Hi, I'm Emma Wall and I'm joined today by Lindsell Train Global Equity to talk about their newest acquisition. Hello Michael, hello James.
Hello Emma.
Michael, a new purchase in any of your funds is a rare thing. The last time that you made an addition to this fund was 2017, and now Prada. What was behind the purchase?
Well, a lot of research. We've been thinking about including a luxury stock for some time. I mean, probably the last 3 or 4 years. We did a big report, internal report on luxury ourselves. We like the idea of appealing to natural human instincts like vanity and aspiration. And we were given the opportunity to think more closely about Prada because the company's been struggling a bit. It's had some poor sales in its directly owned stores. It needs to restructure them. And it slightly lost control of pricing in the wholesale channel, that is in the discounts that they offer to consumers on different platforms. And the company is now restricting inventory. It's now cutting back on its stores that weren't performing. And that's meaning that sales are stagnating and that profits are falling a bit. But that's a temporary thing, we think, and that's giving us an opportunity because the shares have performed badly. To put it into perspective, they're listed in Hong Kong. They were trading at 80 Hong Kong dollars or thereabouts 3 or 4 years ago, and the share price has come down to 20, and we've been buying it over the course of the last summer, at about $23 or $24.
And James, despite these difficulties, there are a lot of fundamentals about the Prada brand and the Prada business that really tick the boxes for what you look for in any stock that you invest in.
No, that's absolutely right. I mean, something that's very key for us is companies with heritage going back behind them. If you can look back a long way, multi-decades, and actually Prada is now over 100 years old, it goes back to 1913. And if you can look forward to the company's future as well and see similar things playing out, that can be quite an important way to construct valuations. On top of that, you've got a brand that is very, very strong, that's been built up over a very, very long time, that has the heritage of Milanese luxury leather goods manufacturing. That heritage can't be created. You can't, from scratch, start a new luxury brand with a heritage going back behind it. And if you want to convince a consumer to pay thousands of pounds, thousands of dollars for a new handbag, for a new coat, it's a very hard thing to do unless you've got that background behind you. And it means that there's almost no new luxury good launches. And as a result, something like Prada that comes along with that heritage, down probably 70% from its highs, it's an attractive thing.
And Michael, as James has just hinted there, although it is listed in Hong Kong, it's very much a global client base for this stock, as with so many of your stocks, isn't there?
Absolutely. I mean, one of Prada's biggest markets is in China. It's been taken up prodigiously in that country over the last few years, and it's opened lots of stores there, part of the problem I was referring to earlier. But it has a heritage that goes back a long way in Europe, in Milan, and it has a focus, I think, on leather goods. And that is an important aspect of the attraction there, because leather goods and handbags, particularly, the most profitable part of any luxury goods company's profile. And Prada has at least 40% of that in its sales makeup.
Now, James, I don't want this video to be too positive. How do you know as an investor that these troubles that Michael spoke about at the beginning of the video are behind Prada? Because there's that thing that any investor faces, which is balancing whether this is a good value at this price stock versus is it this price for a reason?
Well, I mean, price-wise, you can say a couple of things. Firstly, that the price that you pay, or at least when we started buying Prada, you're paying a similar multiple to sales or to earnings to a consumer goods franchise, like a company like Unilever, which is an interesting thing because Unilever has a heritage but doesn't have that luxury element on top of it, which I think distinguishes Prada. But you're then, it's a question of time horizons. So the problems aren't necessarily behind them, and you may have several more years of problems. And as Michael said, you're going to have to start rationalizing things, and that does hit profits, and there probably will be some more pain to come. But in the long term, if you've got a very strong brand, and it's as strong as we think it is, and if you haven't damaged the brand fundamentally by doing all the things that have been going wrong, which we don't think they have, then I think in the long term, you've got a good story.
James, Michael, thank you very much.
Thank you.
Thank you for watching.